What if I told you that right now, at this very moment, an artificial intelligence is making decisions about your mortgage application, flagging your credit card for fraud, and quietly managing billions of dollars in trades, all without a single human lifting a finger? This isn't science fiction. This isn't 5 years from now. This is happening today. And whether you're a Wall Street banker, a small business owner, or just someone trying to save for retirement, AI and finance is about to change everything for you. Welcome back to the channel. I'm Mono, and today we're doing a deep dive into one of the most explosive trends in the global economy, the total AI takeover of the financial world. Stick around, because by the end of this video, you'll understand exactly what's happening, who's winning, who's at risk, and most importantly, what it all means for your money. Let's start with the scale of what we're talking about. According to a 2025 Deloitte report, 64% of finance leaders globally said they are actively embedding AI and technical capabilities into their core operations. That's not experimenting. That's not a pilot program. That's integration, real, structural, permanent. And the money flowing into this? Staggering. Global investment in AI for financial services crossed $35 billion in 2025. Banks, hedge funds, insurance companies, and payment processors are all racing to adopt AI, because the ones that don't, they won't survive the decade. But here's what most people miss when they talk about AI and finance. They think it's just about robots replacing traders on Wall Street. That's the headline. The reality is so much bigger, so much more personal, and honestly, so much more interesting. AI in finance is touching 5 major areas that affect all of us every single day. Let's break them down one by one. Area number 1 is fraud detection, and this one hits closest to home. Every single time you swipe your credit card, whether you're grabbing a coffee, booking a flight, or shopping online at 2 a.m., an AI model is analyzing that transaction in real time. We're talking milliseconds. It's looking at where you are, what device you're using, how much you're spending, what time it is, and comparing all of that to your historical behavior. MasterCard's AI-powered fraud detection system analyzes over 75 billion transactions per year. Visa says their AI prevented over $25 billion in potential fraud losses in 2024 alone. These aren't small numbers. They're protecting ordinary people like you and me. But here's where it gets more sophisticated. The new generation of AI doesn't just catch fraud after the fact, it predicts it before it happens. By analyzing patterns across millions of accounts simultaneously, these systems can identify suspicious behavior days before a criminal even attempts a transaction. Now, there's a flip side to this. The same AI technology that banks use to detect fraud is also being exploited by criminals to create more convincing fraud. Deep fake voices, AI-generated fake documents, synthetic identities built entirely from fabricated data. The arms race between financial security AI and criminal AI is one of the most intense technological battles happening right now, and your money is right in the middle of it. Area number 2 is lending and credit decisions. This one is controversial, and for good reason. Traditionally, when you applied for a loan or mortgage, a human underwriter would review your file. They'd look at your credit score, your income, your debt-to-income ratio, standard stuff. But that process was slow, sometimes weeks, and frankly, it was inconsistent. 2 different underwriters could look at the same application and reach different conclusions. AI changes all of that. Modern AI lending models can process a loan application in seconds. They analyze hundreds of data points, not just your FICO score, but your payment history patterns, employment stability, even alternative data like rent payment history and subscription behavior. The result? Faster decisions, and in many cases, fairer ones, because the AI doesn't have the subconscious biases that human underwriters sometimes do. Companies like Upstart, a fintech lender powered by AI, report that their models approve 43% more borrowers than traditional methods, while simultaneously reducing default rates. That means more people getting access to credit who actually deserve it. That's a genuine win. But, and this is a big but, AI lending models are only as fair as the data they're trained on. If historical lending data reflects decades of discriminatory practices, an AI trained on that data will reproduce those same biases at scale. This is one of the most serious ethical debates in fintech right now. The Consumer Financial Protection Bureau is actively scrutinizing AI lending models for exactly this reason. The promise is enormous, the risk is real, and the regulatory battle is just getting started. Okay, now we're getting into the area that most people think of first when they hear AI in finance, and it's genuinely wild. I'm talking about AI in trading and investment management. Here's a stat that should blow your mind. It's estimated that over 70% of all trades on major U.S. stock exchanges are now executed by algorithms, not humans, machines. In some high-frequency trading firms, algorithms execute thousands of trades per second, each one designed to capitalize on price discrepancies lasting microseconds. But pure speed is old news. The new wave is AI that actually thinks. Hedge funds like Two Sigma, Renaissance Technologies, and Citadel are using machine learning models that read earnings reports, analyze satellite imagery of retail parking lots to predict sales figures, process social media sentiment in real time, and synthesize all of that into trading decisions, all before a human analyst could even finish reading the headline. And it's not just for the ultra-wealthy. Retail investors now have access to AI-powered robo-advisors like Betterment, Wealthfront, and Schwab Intelligent Portfolios. These platforms use AI to automatically build and rebalance diversified portfolios based on your goals, your risk tolerance, and market conditions for the fraction of the cost of a traditional financial advisor. The democratization of AI-powered investing is genuinely one of the most exciting developments in personal finance in a generation. But it also raises a question. What happens when everyone's AI is reading the same signals? Could that create new kinds of instability? Some economists think so, and that's a conversation regulators are having right now. Area 4 is something every single person watching this has already experienced: AI in customer service and personalization. Remember calling your bank and waiting on hold for 45 minutes and then getting transferred 3 times before reaching someone who couldn't actually help you? That experience is dying. AI-powered conversational systems can now handle the vast majority of customer banking inquiries, account balances, transaction disputes, fund transfers, even complex questions about loan terms, instantly, 24/7, in multiple languages. But banks aren't stopping at just answering questions. The frontier is now hyper-personalization. AI systems analyze your spending patterns, your financial goals, your life stage, and deliver proactive, personalized financial guidance, not generic advice, your advice. Think of it like having a financial advisor who knows everything about you and is available every moment of the day. Bank of America's virtual assistant, Erica, has had over 2 billion interactions with customers since its launch. 2 billion! JP Morgan Chase reports that their AI models generate thousands of personalized financial insights for customers daily. This isn't a chatbot that reads from a script. This is a genuinely understanding system that helps you navigate your financial life. Of course, this level of personalization requires your data, and that raises serious privacy concerns. How much do you want your bank to know? How's that data protected? Who else has access to it? These aren't hypothetical concerns. They're things you should be asking your bank right now. The fifth area is the one that gets the least attention in mainstream media, but it might be the most important: regulatory compliance and risk management. Banks operate under an enormous burden of regulatory requirements: anti-money laundering laws, know your customer rules, capital adequacy requirements, sanctions screening. Compliance costs for large banks run into billions of dollars annually, and human compliance teams, no matter how talented, simply cannot process the volume of transactions and alerts generated by modern global finance. Enter AI. Machine learning models can screen millions of transactions simultaneously for signs of money laundering, sanctions violations, and suspicious activity with far greater accuracy and speed than human teams. HSBC, for example, deployed an AI compliance system that dramatically reduced false positive alerts, allowing their human compliance officers to focus on genuinely suspicious cases instead of drowning in noise. On the risk management side, AI models can simulate thousands of economic scenarios simultaneously, stress testing bank portfolios against market crashes, interest rate shocks, geopolitical crises, and flag vulnerabilities before they become catastrophic. This kind of systemic risk monitoring could, if done right, help prevent the next financial crisis before it happens. Now, I want to be real with you, because this video would be incomplete and honestly dishonest if I didn't talk about the serious challenges and risks that come with all of this. Challenge 1. Bias and fairness. AI systems trained on historical financial data can perpetuate and even amplify existing inequalities. If certain communities were historically denied loans or charged higher rates, an AI trained on that data might do the same, faster and at scale. This is not a theoretical problem. It's been documented in real systems. Challenge 2. Explainability. When an AI denies your loan application, you have the right to know why. But many AI models, especially deep learning systems, are essentially black boxes. They produce outputs without being able to explain their reasoning in human terms. This explainability problem is both a legal challenge and an ethical one. Challenge 3. Cybersecurity. The more financial systems depend on AI, the more catastrophic a successful cyber attack on those systems becomes. A compromised AI trading system could destabilize markets. A breached fraud detection model could expose millions of accounts. The attack surface is growing as fast as the technology itself. And challenge 4, the human cost. Let's not sugarcoat this. AI is replacing jobs in finance. Analysts, traders, loan officers, customer service representatives. Roles that employed hundreds of thousands of people are being automated. The transition will be disruptive for many workers, and society needs honest conversations about what support systems need to exist. So what does all of this mean for you, right now, practically? First, embrace the tools. AI-powered budgeting apps, robo-advisors, and personalized financial insights are available to everyday consumers right now, many of them free. Use them. They can genuinely help you make smarter financial decisions. Second, protect your data. Understand what data your bank and financial apps are collecting, how it's being used, and what your rights are. Read privacy policies. Opt out of data sharing where you can. Your financial data is incredibly sensitive. Treat it that way. Third, stay informed. The AI finance landscape is changing faster than almost any other industry. The regulations being written right now will shape your financial rights for decades. Pay attention, vote, engage. And fourth, don't be afraid. Yes, AI in finance is disruptive. Yes, it creates risks, but it also creates real opportunities for smarter investing, fairer lending, and more accessible financial services for people who've historically been left behind by traditional banking. That's worth fighting for. AI integration in finance isn't coming, it's here, and it's moving faster than most people realize. The question is not whether AI will reshape your financial life. It already is. The question is whether you'll be informed enough to navigate it, benefit from it, and hold the institutions deploying it accountable. I hope this video gave you a clearer picture of what's actually happening, why it matters, and what you can do about it. If you found this valuable, smash that like button. It genuinely helps this channel reach more people. Subscribe if you haven't already, because we drop deep dives like this every day. And drop a comment below. What part of AI and finance do you find most exciting, most concerning? I read every single comment. Until next time, stay sharp, stay informed, and take control of your financial future. I'll see you in the next video.